Okay, there's some people. Sorry, guys. We have absolutely no idea what just happened.
The magic.
Yes, glad you stuck with us. And I'll watch my emails to let everybody know they can get back on. Okay, we've got some of them.
Really, we all just wanted more coffee, right?
Yes, that's it. That's it. Let's see. Okay, we've got 43 back. Maybe we can go ahead and try again. Somebody asked to be let in, but we are pretty much letting everybody in as they try. So, okay. So Tanya, go ahead. We'll see what happens.
So you guys, I'm in Nebraska and it's supposed to snow today. So, right, Cassie, you're getting the same dumb storm that we are. Okay, I forgot where I was. What was the last thing I said? No, I'm just joking. All right, hold on. Let me share some stuff. All right. Okay. I think I was grandstanding about chart of accounts and making sure that your QuickBooks, or that you set up in your profit and loss so that your cost of goods sold reflect the revenue that you're collecting, to make sure that it all kind of matches, so that you can see how well you're doing in your business. So you can use account numbers. I'll show you. Let me just check something. Okay. When you're in the chart of accounts, I'm going to show you a couple other things. So if you make a new chart of account, it's always going to pop this kind of side panel open. And then you have to pick from one of these little bubbles, like what is it that you bought, or what is it that you need a new account for? Most of the time we're going to use income and expenses, which is why they're first. There's a bank account option, your assets. If you were to pick an asset, it's going to ask you what kind of asset it is. So usually assets are accounts receivable, your inventory, prepaids, which means that you paid, like your insurance, for example. If you pay the whole year up front, that you could record that as a prepaid. Those kind of things. Your fixed assets are big, lot of dollars, long life kind of thing. Other assets are usually intangible things. So things you can't touch. Like if you got if you bought a business, for example, you would probably have some kind of intangible asset for the customer list or the intellectual property that you purchased. Credit cards are here. So if you have a credit card, I want to warn you though, we'll talk about it in the bank demo, but if you have like a Bank of America credit card or a Chase credit card that has multiple cards under the same parent account, you have to set them up that way in QuickBooks as well. So you would set up each individual card holder as a child account and then the parent credit card. And I'll show you how to do that. Liabilities are things that we owe. So it's all of our loans. Sorry, my Minnesota slow drug out there, but it's all of our loans. It's our accounts payable. It's customer deposits. If we collect deposits from customers, those kind of things. And then our equity section are transactions that deal with our owners. The other thing, let's see if I can find. So here, I want you to notice, do you see all of these? So these are those sub accounts that I was talking about, the parent and the child. So landscaping services is the overarching parent. It's the main account. And then underneath it is job materials, because you see it indented slightly there. But this labor is also underneath landscaping services. But then job materials has children as well. So decks and patios is a grandchild to landscaping services. Job materials and labor are a child to landscaping services. Does that make sense? So it's very much like you can set up those kind of accounts. So fuel here is a child to automotive. Workers' comp is a child to insurance. And so you can have what they call sub-accounts. And you can have sub-accounts of sub-accounts. So like installation and maintenance and repairs are the sub-accounts to cost of labor, which is a sub-account of job expenses. So it can go parent or grandparent, parent, child, teen mom kind of thing. So you can go multiple layers down, if that makes sense. All right. You can run reports on any of them. If you are tired of looking at them, you can make them inactive. I'll ask if you're sure, and you say yes. And then if you're like, wait, I shouldn't have done that, your inactive lives here. You would include inactive on the settings box. And then if you go all the way down to the bottom, there's an option to make it active again. Okay. So you can see it there. If you wanted to print your list, you could. If you need to export it, there's a different way to do it. You would run a report here, and then you could export it from this option here, or send it to Google Sheets, that kind of thing. All right. Let me see if there's anything else we want to talk about. The old version of the chart of accounts didn't have that slider window that came out from the side. It had this little box that popped up. And sometimes when you're doing things, it's going to give you that pop-up box instead of the slider. So just be aware of that. All of the same information that's here is there, but it just looks differently. Okay. Let's say that you can merge. Okay, to export, you would run a report, Tanya, and then you would click this little export button. And we'll talk about the export, these buttons here, when we talk about reporting. Yes, and we all got kicked out. It was very gremlin-y. All right, so I want to show you, let's say we need to merge some things together. So let's say that this Board of Equalization payroll or payable and this Arizona Department of Revenue payable are the same thing. So I'm going to show you a trick. So if we edit this one, because let's say it's only the Board of Equalization that we need, right? I'm just going to highlight this and Control-C on the keyboard. Because if we go to this Arizona Department of Revenue payable and edit this one, and it's probably going to freak out on me because I picked a sales tax account. Do you see how they turn red down here when I made the name the same? If you make the names the same, everything else has to be the same as well. So like here in the background, you can see this detail type column where it says credit card, sales tax payable, other current liabilities. They have to be exactly the same. So this one that says sales tax payable, you can't merge with other current liabilities. Because they have two different detail types. So if I save this, it's going to say, hey, there's already an account with that name. Do you want to merge them? And I'm going to say, yes, merge them together. And then when I save, my Arizona Department of Revenue payable is going to come off my list. And now I'm just going to have, it shows as deleted here. So then I could make it active again if I needed it. But we don't. So that's how if you're like, oh shoot, I have an office supply account and an office supplies account. You can make them the same if you end up with two. So Bodhi asked, I tried to reconcile my account last month for my credit card and there was a balance left over. It's because I have an employee credit card with an expense. Maybe that's the reason the account didn't zero out. Bodhi asked me that tomorrow when we talk about reconciliations, but things don't have to zero out when you reconcile them. So that's the point, is that you reconcile the credit cards we'll talk about it tomorrow though. Okay, we're going to talk about products and services, and then we're going to take a hot minute. Yes, sales tax comes at the very end, tomorrow. So yeah. Okay, so products and service demo. So the products and services are the things that we sell. So remember, because it's QuickBooks, there's 15 ways to get there. So you can go to sales and products and services, or you can go to your gear icon to products and services under your list menu. Either way, it gets you to the exact same place. Here's my products and services. Here's my products and services. So your products and services are things that you sell. So here you can be specific, but don't be specific to the point that it's overwhelming. You don't want to create a juggernaut. Like, it needs to be enough information that you know what you're selling. So for example, let's say that you run a department store, right? Let's pretend that you run a Costco. So Costco sells a million things, right? So what we would have is we would have product categories that would be like, here's my meat department, here's my clothing department, here's my kitchen gadget department, here's my tires, right? But within each one of those product categories, we would have the things that we would sell. So in our meat department, we would have chicken and fish and, pork or beef or whatever, you would have all of your things listed there. So what you sell you can divide it into categories, because then when you're running reports later, you can say, how were my meat sales? And then you can compare like all of your meat sales from this year to last year, from this month to last month, something like that. So just be aware of those things that you kind of want to group. You can group things together. So when you're in your products and services, for example, it pops out this little slider to the side and it gives you an option that said there's 4 things there, right? And so those 4 things are the types of things that you sell. So the first one is inventory, and that is literally inventory. So if you buy something that is a small dollar amount, and it's kind of casually that you buy it, like let's say that I thought there was a book that all my clients needed to read, I wouldn't make it an inventory item. So I would only set up inventory if I truly had products that I sold or component parts that I assembled into a product that I sold. Okay. So those of you that have like restaurants and things like that, or you have, if you're not like a retail store, I wouldn't necessarily set up inventory. Okay. Your other option for stuff that you sell is non-inventory. So you can have stuff that you sell that's non-inventory. The difference is when you buy your inventory, it's going to go like, I bought 10,000 widgets to sell, and they're going to sit as an asset on your balance sheet. And then as you sell them, you're going to deplete the 10,000 that you have on hand. Okay. If you do it as a non-inventory, it's going to say, I bought 10,000 widgets, which are now cost of goods sold. Okay. So there's a matching part that would be weird because you might not sell all 10,000 at once. But if each one was 2 cents, who cares, right? Like we care, but we don't care that it's an asset on our balance sheet. A service, or for services that you offer, so like my company, for example, only sells services. If you have, okay, so someone asked if they're a print shop, and the print shop has the inventory, do we need to set it up? So I would argue like the inventory that the print shop has, like if you have giant spools of paper and a bunch of ink, for example, that's not, yes, that's inventory, but it's not inventory that you're reselling. Those are just costs for you to provide the services or the products that people ultimately want. So I still wouldn't necessarily set it up as inventory. Like if you're a car dealership, for example, like that would be inventory. Because so a lot of times like inventory is a thing in QuickBooks. So you should be very specific and very intentional about setting up inventory. And if you're not willing to do a lot of work around it, then I would make everything non-inventory parts at this moment, okay, until you get better at accounting. If you, so for those of you that sell, like if you're involved in any kind of food, if you have a coffee shop or a food truck or something like that, I would do non-inventory for your food products that you sell. And you could set them up just as bakery good, like baked goods, coffee kind of thing. Or you can be very specific about what you sell. So Jessica asked, she's a day camp that includes the t-shirt and the cost of the camp. How would you set that up? So Jessica, if you're just giving someone a t-shirt as part of the cost of the camp, then I would just actually make the t-shirt like a cost of goods sold expense, and maybe not necessarily include it in what you're selling. But if you wanted to include it in what you sold, you would make your t-shirt a non-inventory part. And then you would set your service up for the cost of the camp. And then you would create a bundle that had the different tiers. So for example, if there was, like multiple, like if they could buy a day camp, a 7-day pass or 8-day pass or 10-day pass, whatever, then you would create a bundle that included the t-shirt as a non-inventory part and the service for the cost of the camp. Okay, and Leah said it. So if I buy a product simply for the creation of a final product, she's a floral designer for weddings and sells bouquets, I can do a non-inventory and use a cost of goods sold account. And that is exactly correct. So, okay, so these are just your types of products and services. So I want to show you, I'll show you the difference. So when you're in the inventory, if you pick that it's an inventory, this part at the bottom looks a little bit different here because it has this inventory asset account section. And it has all this reorder information. At what point do I have to reorder it? But we're going to change our type and make it a non-inventory. So now we're going to set up a t-shirt. And if we had a SKU number, we could put that in here, for example. And then this is the product category. So this is what I was saying about, like our meat department or our tires or our clothing, whatever. We could pick something here that made sense where we would want to nestle it under, but we don't have to if we don't want to. And then it's asking, I sell this product and service to my customer. Excuse me. So when you sell it, what do we want to call it? And we can call it, I told you to don't watch me while I type. We can call it a t-shirt and we're going to sell it for $10 a piece, let's say. And then it asks our income account. This income account, this is why your chart of accounts is so important, because this income account goes right back to your chart of accounts. Remember we were talking about, let me find my revenue. Sorry, I'm scrolling around, but they're at the top. So remember we talked about landscaping services. Here's our job materials. Here's our labor. Here's our grandchildren. Remember all of that? So this is where you pick. This is what makes sense to me. This is where I want the revenue to go when I sell that. So we're just going to put landscaping services. I'm going to skip the sales tax for a minute because I want to talk about this purchasing portion. If you buy this thing because you're going to resell it, then this is that two-way item that I was talking about before, where we're going to buy it and then resell it. The carpet extractor ones, remember I talked about that this morning. So here we could say, we could also buy this t-shirt. And when we buy this t-shirt, we're going to have it go to our cost of goods sold account. Okay. So those are the two-way items. So whatever I'm buying, I'm ultimately reselling. You maybe might make a few changes to it, but you're ultimately going to resell it. So, I'm going to use Cassie as an example because I think she'll appreciate this, and I know her and she won't care. She's the one that's expecting this name snowstorm in Wisconsin. So Cassie works for a chimney sweep. And so, for example, they have to go out and buy pallets of bricks when they're building a new fireplace for someone or making repairs to a new fireplace, but they also sell that same masonry. So for Cassie, she could set up a non-inventory item called masonry or bricks, something like that. And then she would have bricks be, or masonry, whatever she would want to call it. She would pick that income account associated with the repair or installation of a new fireplace. And then she would have a cost of goods sold account for her masonry or her bricks for when she bought them. So when she bought it, she could pick, I just bought, 3 pallets of bricks. And then when she sold it, she could also sell however many pallets of bricks as well. Okay, questions about two-way products and services? Does that make sense? So if you're buying it to resell it, you can check this box. If you don't want to worry about that, if you don't want to track your purchases associated with your revenue, you would uncheck that box. Okay. All right. Okay. So sales tax. Intuit, I'm going to mention it here. We're going to talk about it again tomorrow. So because this portion in the middle here is where you set up sales tax for each individual item. You would say that, hey, my t-shirts are taxable in this state. In Arizona, if you were to sell products or food, it is taxable. So it's telling me that general clothing is a taxable activity. Okay. So here you can confirm this. And then it's going to say, okay, this is a taxable activity. So a lot of times, in my experience, Intuit gets it a little wrong. Okay. So be careful about how automated the sales tax is within QuickBooks. All right. Because it's going to think some things are taxable when they're not. If you collect deposits from your customer, that is not a taxable activity. Okay. Once you click, you can skip that, you can confirm it, but you can also edit your sales tax here. And what's going to happen is it's going to tell you these suggested types of categories of things. So a lot of times when you are looking at these categories of all of these events that are taxable, like there's a sales tax holiday, like this, does this make any sense? So a lot of times they're using super fancy, like Department of Revenue words. And so it gets really confusing. So just use your judgment about what it is and why QuickBooks thinks it's taxable. Okay. Be careful about, if most of you are in Arizona, like Arizona taxes stuff, it doesn't necessarily tax labor, for example. So be careful with those things. If you have questions, like all departments of revenue are willing to help you figure out what's taxable and what's not. And almost all of them in every state, all of my clients have ever done business in, they have some kind of class that you can go and learn all about sales tax and how to collect it and what's taxable and what's not for you in your industry in the state that you're in. Okay. All right. So anyway, so it's telling us that this product and service, it thinks it's general clothing, and it's saying use this one if you can't find anything else that fits. So a t-shirt is general clothing, so we can leave that there. But there's these options down here, way down at the bottom, okay, that says this is taxable based on location only, or it's non-taxable. So if you're setting up something that's non-taxable and QuickBooks is trying to tell you that it's a taxable activity, you come all the way in here and you click non-taxable, okay? I'm going to show you that one more time because it gets really confusing about where it is. So do you see these check boxes that say taxable here? So these ones are set up as taxable. This design is not taxable. Let's pretend that this concrete is for pouring the concrete and not actually the materials. So we would edit this and it says it's that stinks. It says it's already not taxable, but it was totally taxable. So then you would click edit sales tax and non-taxable is here. Okay. And one more time, I'll show it to you one more time. So you would pick this one. So we're going to edit. It says it's non-taxable. You can edit your sales tax rate and then you can type whatever it is, So we'll just say general clothing again. You guys got to stop watching me while I type. Okay, so we'll say that it won't let me pick any of those, which is just this, me not being able to pick it is the sample company weirdo. So we can change it to non-taxable here or make it taxable there, okay? Is that clear as mud? Okay, so Tanya asked, we sell window treatments from different vendors and then sell to customers. How can I list the different vendors and the products and services without letting the customer know which one vendor we use? We don't want the different vendors showing up on the client's invoices. They can contact them directly to get a cheaper price. So what you're selling, the products and services that you're selling here, like you can pick a preferred vendor, but you don't have to. So for your window treatments, you could have blinds, and then you could have wood blinds and fabric or something like that. Those would be your products that you're selling. Where you buy them from comes in our next section, okay? When you go in to enter the purchase of what you made, like where you bought them is entirely up to you. So, but this box at the bottom here, about the purchasing information, this box down here is only if you want to track those two-way parts, so, or products and services. So I'm going to buy this and then maybe do something to it, maybe not, and then I'm going to resell it. So if you have to track those two-way items, then you would put in the purchasing information bottom. Okay. Okay, thanks, Christina. All right, you guys, let's take a couple of minutes. It is 10:40 where I'm at, so 10:39 actually. So let's just take like 6 minutes. And then yes, we'll talk more about sales tax later. And let's come back then, and then we'll go on with the rest of the day. So I will see you back here in about 6 minutes. I'll warn you when it gets closer. And then I'm going to get more coffee, and I will see you all shortly.
Everything okay? Just waiting on everybody.
Yeah, I was sending some, they should all be coming back now.
Okay, perfect.
I wanted more coffee, so. All right. Okay. So follow the sound of my voice. If coffee is my sheer motivation for getting out of bed, and I'm sorry to say this to most people on here, but like, if you don't drink coffee, I secretly distrust you because I don't understand your motivation. So, I put a couple of links in the chat that you should be able to see. So I linked to where the Arizona Department of Revenue will do taxpayer education classes. So you can find everything you wanted to know, probably more than you wanted to know about sales tax, for example, in Arizona. The importer tool that I mentioned earlier, Transaction Pro. I love that I have a client that has a point of sale system. They're a print shop, actually. They have a point of sale system. We get a CSV file out of their point of sale system every day. And then we use Transaction Pro to import it into QuickBooks. And then for those of you that are still writing checks, then I put a link to Melio Payments. And if there's time today, I'll show you how that works. I'll try to get into something and see if I can make that work. But okay, we're going, if I can remember what I'm doing, we're going to talk about vendors. Sorry, my computer hates me. John, they're in the chat, which I cannot. Sorry, my Zoom shrunk. So they're in the chat. So let me know if you can't find them there. Okay. All right. We're going to talk about vendors and expenses. So you guys, I'm telling you, I'm having shared a keyboard interface errors over here. Okay. All right, I think I got it now. All right, vendors and expenses. So we're going to talk about, and at the end of this, you should be able to, oops, sorry, one too many escapes. I needed to make my screen smaller, and instead I just shrunk it off. Let me get situated. I'm sorry, you guys. All right. Oh, poop. Karen, can you see the links in the chat? Okay.
Hold on, I'm looking, sorry. Yeah, I see them.
Okay, can you put those can you send them out to everyone later?
Yes, I can.
Thank you. I meant to say please, and I forgot my manners there. Thank you. Okay, so Karen will email those to you guys. All right. Okay, so and then hopefully you can all see my screen. This is vendor and expense topics. All right. So in this next part, we're going to talk about vendors and expenses, and we're going to talk about establishing a new vendor, identify your best practices using QuickBooks Online to record your expenses, determine the appropriate expense related settings, recognize the alternative entry points for entering purchase transactions. We're going to pay bills and print checks. Okay. Hosanna, I'll try to do something about that. Okay, so in QuickBooks, remember we talked about this menu on the left, right? If you go to expenses and then vendors, this is where all your vendors live. Your vendors are who you pay for expenses. It can be overhead expenses, it can be cost of goods sold, it could be any type of, it could be a bank, if you pay a bank fee, any of those kind of things. Your vendors that are here, it's a record of who you pay, and then you can go into them and track information like if you have a contract with them, You should also be collecting W-9s from them, things like that. So when you're in, a lot of times we will buy gas and go out to eat and things like that, or travel and book on different airlines, or you sometimes use a Lyft and sometimes use an Uber. For any of those things that are things that we buy, I set up really generic vendor names. So I have a vendor name called restaurant, which is literally just wherever I eat. And then in the memo, I put what it was and why it was. So like if Karen and I went out to lunch, I would pick restaurant as the vendor name instead of Bob's Burger Joint, for example. I would pick restaurant for the vendor name. And then in the memo, I would put Bob's Burger Joint with Karen to talk about the QuickBooks Online class. Make sense? So I use some generic names for some things, like when I buy gas, because nobody wants to set up 15 million Chevron stations and 15 million QT stations, things like that. Like I just have one that says gas and one that says hotel and one that says travel or airline or taxi or something like that. So just keep that in mind. You don't have to set up everything that way. What you have to set up are the ones where you buy lots of stuff. The ones where you have to report what you purchased on a 1099, for example. Those are the ones you have to set up in detail. So I'm going to show you how to do that now. So you go to new vendor. And so if you can type the name of the vendor, for example, here, but I also want to tell you is there's a shortcut when you're doing a transaction. So and we're going to talk about this in a minute, but if I needed to write a check to a new vendor, I would go under check and I could start typing. Barbara Gordon, that's her right there, my office mate, curled up in the blanket. And it's going to pop out this same slider. So you can be in the middle of a transaction and add a vendor, or you can be in a transaction and you can add an expense account. Okay. So this is what, when we talked about multiple entry points a minute ago, that's what that means. So new vendor, and then it's going to ask you for some information. So is it a company or is it a first name, last name? So we're going to put in my Barbara Gordon as a vendor, and her email is bg at. You guys have got to stop watching me type. It's going to take forever if you guys keep watching me like this. And then you're going to put in her address. And then, and I have a feeling there's a squirrel outside, so it might get noisy, and I'm gonna mute myself. You can put in notes here. If you say like contract for 1 year, whatever note you have, doesn't like peanut butter, whatever you need to know about that vendor, you can add a note here. This attachment, this is the part where we talked about attaching things. If you add an attachment to something, like if you had a contract with this vendor, you could add it here. If you had, let me see if I can find something to attach. If you had a contract with them, you would attach it. If you had a W-9, you would attach it. So you would want to attach your W-9s. The nice thing is that when you click on it later, it'll open. This was her being silly when we were in quarantine. So you can open it later because it's going to stay attached to that vendor record. Okay. This part for taxes, this is where you would put in their social security number or tax ID number. Okay. Just a quick word about 1099s. So you are required to report to the IRS by January 31st of the following year, all of the payments that you've made to people for services, rent, legal fees, legal settlements, fishing boat proceeds, insurance, or sorry, not insurance, interest, non-employee compensation, royalties. Most of us pay lawyers. Most of us pay for services. Most of us pay for pay interest to a private party, like if you're making private party payments for interest. All of those things you have to report to the IRS if they're not a corporation. Okay, the only way to know if someone is a corporation is if they provide you with a W-9 that says that they're a corporation. So, oops, you guys have got to stop watching me type. Terrible. All right, on your Form W-9, I'm going to show this form to you, and I'm going to put my little accountant hat on and bore you all for a while. So here it says, if you give this form, if you're about to pay someone for services, okay, so let's say that our landscaping company is hiring Barbara Gordon to be a supermodel for them, right? So we would put on the form, Barbara Gordon, and if she's an individual sole proprietor or a partnership or an LLC that files as a partnership, we are required to give her a 1099. But without this W-9 form, how do you know what she is, right? You don't. So you need to collect a W-9 form from anyone that you're paying for services, rent, or lawyering every time you pay them for the first time, okay? You don't have to collect new ones every year. If they have a name change, you should collect a new one. If they have an address change, you should collect a new one, but you have to collect W-9s from people that you pay for services. All right. And then you're going to give them a 1099 if they're an individual, a partnership, or a limited liability company that files as a partnership. Okay. When they fill this form out for you, you would attach it here. And then if they checked one of those three things, you would check this box to track the payment for 1099s. All right. We're not going to talk in detail about 1099s today. But again, if you Google, how do I do 1099s in QuickBooks Online, you'll see 1.5 million YouTube videos about how to do it. Okay. And then the attachment, I don't know if the attachment is visible in the app, unfortunately, Allison. It's visible in like an online version for sure in multiple places, but I don't know if it's visible in an app. If you need it visible in the app, it might be worthwhile that there's something in the attachment that you would need to reference. If you're in the app, it might be worthwhile to put it in the notes section. But remind me tomorrow and we'll check that out. Okay, and then is there a free trial for QuickBooks, for the QuickBooks accounting? Michelle, you'll have to clarify, but is that the live bookkeeping you're talking about, or is there a free trial for QuickBooks Online? I think there's a free trial for QuickBooks Online, and then it's discounted for the first 3 months to 50%. But let me know if that didn't answer your question. Okay. All right. So we've got all of our vendor information in here. You can set an hourly rate and you can set payment terms. So let's say that Barbara Gordon demands her money. Immediately when she invoices you, you can pick due on receipt. If you have an account number with them, like your utility company, for example, you can include that. If there's a default expense category, you can include that also. So we're just going to say this is professional fees. And then I would never use this opening balance section. So if you ever feel like you have to meet it, send me an email and I'll talk you out of it and tell you where you can go to get it, do it instead. Okay, and then if you wanted to add a custom fields, you could do it here also. So any questions about how you add a new vendor? Okay, QuickBooks Online has changed recently, and they've added a feature where they're trying to build a network of all of their customers. So if you were to go into a live version of QuickBooks Online and you were to start typing Barbara Gordon, when you're typing their name, it's going to come up with this little like search box that will ultimately get smaller. And then as you continue to type out the letters, and it will try to match those people that are already in the Intuit network with whoever you're trying to find. So Nancy, yes, it is kind of like a CRM tool, but I don't love it because it keeps trying to answer, like, it doesn't seem to find the one that I want. So I don't think, and they just did it like 2 weeks ago, so like they're still working the kinks out. So just know that that's going to happen when you're in there. But there's an option as you're like typing in the box and it's pulling up this huge list of like all the Intuit people that they think they know. There's a button at the bottom. There's a little link at the bottom of the list that says add it manually. So you can just do add it manually. And then, Leah asked at the bottom here. So if there's a default expense category, you can pick it, but you don't have to pick anything here. You can just leave it blank. The reason that you would pick it is, like, let's say, for example, it's your utility bill. Like, you're always going to put your APS bill or your SRP bill into utility expense. So like, it'll just automatically populate that way. So how would you record an expense that you paid on your personal credit card in lieu of a business credit card? And Darren said he's been recording them as cash and adding an offsetting owner's equity because he's not looking to be reimbursed. And that is exactly how you would do it, except if your cash is an expense account, you would want to make it a bank account and then pick what you're paying for in cash. So I'll show you that one in a minute. Okay, so I picked legal and professional fees here for Barbara Gordon. I'm just going to show you one quick thing. So now when I go to, let's say I'm going to pay her with a check, or I'm going to use Melio to pay her. When I type her name now, it's going to come up and tell me that it's legal and professional fees. It's going to add it here already. Okay. I can always change it. Like, let's say I'm reimbursing her for some office supplies or something. I can always change it to be something different. Okay. And then to answer Darren's question really quickly, here where it says bank account, I would do a petty cash or an owner cash, whatever makes sense in your brain. Man, guys, stop watching me. And I'm just going to add this is the old version of the QuickBooks chart of accounts. So my account is a bank account, cash on hand, petty cash. So if you have this petty cash account, for example, then what happens is when you put in the $100, then you would pick your owner equity here. Hold on, I don't know what it's called in this one. Maybe there's no equity accounts in it. Did you guys see one? Here. These are terrible, but okay. So then you would pick your owner equity account and do the minus the $100. So Darren, I think this would be a better way. Or you would adjust the bank account balance in your petty cash owner cash account against your opening balance equity or against your owner's equity at the end of every month, for example. Okay, so all right, so we talked about how you set up a new vendor. We talked about how you can get to different places to set up a new vendor. And then I want to show you a couple other things. So in this plus new button, there are a few things here that we want to talk about. So an expense is like for your credit card purchases, for your debit card purchases, for your petty cash purchases, things like that. Your expenses are here. And when you go to your payment accounts, it's going to list all of your payment accounts that are available to you. So here I can pick checking, I can pick my owner petty cash, I just set up my savings, my MasterCard, or my Visa. But I wanted to show you, if you pick a check as the type that you want to enter, the difference is that I'm only allowed to pick my bank accounts. So you can see I only have 3 to choose from. So there's a check number box here where you would put the check number. But if you look at the expenses a little bit more closely, there's a number box on the expenses as well. So you can still put your check number in your expense box. So you can use expenses to record any kind of payment that you made, whether it was by check, by credit card, by ACH transfer, by wire, a debit card purchase, whatever. You can always use an expense. You can only use check, the transaction type check, if it's a bank account. Okay. So in my mind, just use the expense and then pick what you're buying. Okay. So you would use expense if you've already paid for it at the same time that you want to record it. Okay. You use a bill if you owe the money to someone but aren't going to pay that right now. Okay. So if you enter a bill, maybe. Okay. All right. So Barbara Gordon did some work from us. Her terms are due on receipt. So we're supposed to pay her, but let's say that it's a project and we negotiated some things and we're going to pay her in 60 days. And so she gave us the invoice for today. And I just want to tell you that if you're in QuickBooks too, if you push the T button on the keyboard, it'll default to today. If you push the plus button on your keyboard, it'll add dates, and the minus button will subtract them. Okay. The R button defaults to the end of the year, but T for today. So now it's going to be due on April 24th, and it's her invoice 1005. And it was for legal and professional fees because she was doing our supermodel work and we owe her $10,000. All right. Wouldn't it be great? So the other thing that's in here, when you're recording a bill, all of this section from here down, all of this is the same. The part, Nancy, I just made up that bill number. So the part that is different on a bill from an expense or a check is the bill date, the terms, and the due date. So when did they invoice us? When is it due? What kind of terms did they give us? Okay. The rest of it is all the same. So I'm going to open in this tab an expense. And I'm gonna, so on the expense, there's a payment date, but there's no due date and there's no bill date and there's no payment terms. Okay, do you see that difference? Terms, bill date, due date, none of that is here. But if I paid Barbara Gordon when I'm recording it, I could put in her 105 or 1005 there. The other part, so category details, item details, you see all of this, memo attachments, those are all the same here. So it's all the same outside of a little bit of boxes at the top, okay? But remember, a bill is, I owe someone money, but I'm not paying it right now. And expenses, I paid them already and I need to record it. So we owe this bill to Barbara Gordon, we owe her 10 grand. And if you wanted to, for example, like, let's say that this is the part where I was telling you my friend loved me because I told her how to make it billable to a customer. Okay. And you would check this box if I was going to take this expense and turn around and add it to an invoice to a customer. If you're going to mark it up or not mark it up, that part doesn't matter. But if you're going to bill that expense, if you're going to ask for a reimbursement, for example, from a customer, you would check this box to make it billable. So I have a friend that does like a bunch of marketing things, and she'll often buy brochures or, calendars, or have things printed or have things made for her clients, like with their logo, for example, all of the marketing material. So she'll buy it, check that box that it's billable, and then she'll be able to track how much is owed to her from all those individual customers. All right. Okay. We talked about a lot of things. Who's got questions? Someone asked, you online marketplace fees go under a vendor? So yeah, you can put them there. That's fine. So I think generically, like, just make a stripe or make a stripe or a square or Etsy or something like that would be fine. So your bills, Nancy asked if bills have to have a number. No, they don't have to have a number. They usually should though, because you would want to track, like, let's say that Barbara Gordon's going to bill us $1,000 a month for 10 months. You would want to track which months you paid for. So even if you don't put a number in there, maybe put like, this was February and this was January or something like that. So, and Leah says, if I have all my bank and credit card accounts set to automatically flow in, I don't necessarily need to be adding expenses this manual way, right? They will be in my QuickBooks and I will just need to confirm them. Yes, you can do it that way. Absolutely. So sometimes we have reasons that we would need to track that we owe money to someone. And the thing, Leah, that you can't do when you're in and recording the expenses the way that you are, you can't pick those two-way products. So remember we were talking about how Cassie might buy 3 pallets worth of bricks. Like you can't pick that you're buying a fountain pump from where you're doing it in QuickBooks. So if you're working from the bank feed, you can't pick that you are buying a fountain pump. Yeah. So and the other thing you can't do is you can't make something billable to a customer in the bank feeds as well. They're kind of adding it, like you can pick that it's for a customer, but it gets a little goofy there. So I like to use expenses and bills when you're doing a little bit more complicated accounting. Okay, so Darren said that he doesn't see the billable part in QuickBooks. So you are correct. It is a feature that you have to turn on. So you would go under your accountant settings and then to expenses. And it's in this first box. Track expenses and items. Oops, sorry, it moved back. Track expenses and items by customer. And then if you wanted to add a markup, you could add that here. You can make it so that it charges sales tax. Yeah, I know you're asking about sales tax, but this is, if you wanted to add sales tax to the markup, this is where you would do it. So, and Darren, it is only in specific versions. I think it's in Plus and Advanced for sure. I'm not sure if it's in Essentials. Okay. So Nancy sells it at the farmer's market. What are some tools that can automatically report income in QuickBooks? And how does Square relate to this? She's a new business, so a lot of things don't make sense to me. You'll get there, I promise. So with Square has an integrator tool that integrates within QuickBooks. So you can actually link your Square account to QuickBooks. And if you're telling Square what you're selling at the farmer's market, it'll come into QuickBooks that way as well. And I can show you. So if it would come into these app transactions, Nancy, if you linked your QuickBooks with Square, QuickBooks Online, it would come into app transactions under banking. And there is an integrator tool that does that for you. Okay, so does everyone understand the difference between a bill and an expense? So a bill meaning that you are going to owe someone money at some point in the future and you want to track it that way. A lot of my clients, the larger clients will use bills, for example, but most of the smaller ones will just record an expense when it gets paid. But if you have a pile of paperwork sitting on your desk or a whole bunch of things sitting on your, icons on your desktop because you're trying to remind yourself to pay them later, you might want to turn on the bill feature and then track it that way. So yes, about the billable checkmark, we'll explain that again. If you're buying something, so there's a couple things that I want to make different. If you're buying something that you're reselling, you would use an item. Okay, so let's say that we're buying a pump. Okay, and we're going to buy 10 of these pumps and we're going to bill them back to Amy's Bird Sanctuary because Amy asked us to come in and build this, put in like put in different water fountains in all of her little, pens in her bird sanctuary. So that would be something that's billable. Or we could say we're just buying 10 pumps and we're just going to keep them in stock to have them around for later when we want to sell them. And then you wouldn't necessarily pick that it's billable to a customer. So if you're buying something that you're specifically going to want to put on an invoice to someone, you would mark it as billable, and then you would put whoever you wanted to sell it to. So here, what I just said is that what this transaction tells me is that I'm going to take $10,000 worth of supermodel charges from Barbara Gordon, and I'm going to bill Amy's Bird Sanctuary for them. And then I'm also going to bill Amy's Bird Sanctuary for 10 concrete pumps or 10 fountain pumps that I also bought. This taxable part here means, do you need to collect sales tax on it when you bill it to Amy's Bird Sanctuary? That's what this taxable means. Okay, so we're going to assume that this fountain pumps are taxable, but the services are not. So I'm going to save this, and I'm going to show you what happens then when we want to try to invoice Amy's Bird Sanctuary. Okay, so I know my examples are terrible, but creative accountants go to jail. So I'm sorry, you guys. Okay, so now I'm going to send Amy's Bird Sanctuary an invoice, and when I pick her, it pops out with this fountain pump and this supermodel charge. So you could add those expenses to her invoice, and then I could collect that money from Amy's Bird Sanctuary. And because I marked that the fountains were taxable, it added $8 worth of California sales tax. All right. We're going to talk about these charges and things like this tomorrow when we talk about sales. But I just wanted you to know that when you're entering an expense, for example, when you're entering an expense, that's how you do it. Is if you want to track that specific purchase to be invoiced back to a client, then you would go back to your original bill and you would mark that this is billable to this client and things like that. All right. The other thing, okay, more questions on that? This part, marking things as billable and this taxable, non-taxable, is fairly complicated. So if it doesn't make sense right now, that's okay. But just, I want you to know that that feature is out there. So if you are buying things and reselling them later, that feature is available to you. Okay, any more questions before I talk about the next thing? Okay. I'm going to try this because it says save and schedule payment. So the whole point of entering a bill is that you're not going to pay it right away. But this, I wanted to show you this. This is Melio. So we'll see. I've never done the demo with it. So we're just going to kind of wing it and see what happens here. But within Melio, it gives you the option to pay people electronically. So you can, it'll either send them a check in the mail, and I don't think it's going to load, but you can either send them a check in the mail, and then what happens is Melio will, they're owned by Intuit. Sorry, too much coffee. They're owned by Intuit, so they go into your bank account and they take out the $10,100 that we wanted to pay Barbara Gordon. And then what happens is then you can electronically pay her. So Barbara Gordon would get an ACH bank deposit, like a direct deposit, into her bank account. You can send vendor invites for it. It's super frustrating that it's not going to load. Oh, it's my cutie pie again. But when you're in those, when you're working within Melio, you have a list of all of your customers, you have a list of all of your vendors, and you can do transactions within Melio. Cassie asked if there's a fee for it. So they're letting, you can send so many payments per month for free. And if you send payments by check, I think they charge you like $1.50 or something because they have to physically print the check and mail it. And I think stamps are like 60 cents now. So the other thing is know that if you like, if I were to schedule a payment, I scheduled some payments yesterday with Melio. So I scheduled them on the 21st. The money withdrew on the 22nd. And the person's going to get the funds on Monday, the 27th. So it takes about 3 to 5 days to get there. And then Nancy asked if we have QuickBooks Pro, if we can share access with employees. Yes, you would go under the gear icon to manage users there. So when you're paying bills in Melio, I like it because it's not your checking account and routing number that's across the bottom of a check. So I just had a client in North Phoenix actually, and their checks were stolen out of their mailbox and then washed. And someone washed off the name of our vendor that we wanted to pay and put in their name. But stupidly, they put in their own address. And so the police were able to find them. So, and then can schedule payments directly from the bank account also show up in QuickBooks. So if you schedule a payment to a vendor using like your bank's bill pay system or your bank's ACH system or some other system like bill.com, for example, all of those things will sync into QuickBooks provided that that provider is linked. So you would have to link bill.com to QuickBooks. You would have to link your bank account to QuickBooks, but yes, they would ask that. Okay, so Brooke is asking about how she can accept payments electronically within QuickBooks. And so Brooke, I'm going to table that one till tomorrow because I wanted to get through the rest of the demo products for the vendor parts. But let me know if you're not going to be around tomorrow and I'll tell you how to do it today. So, okay, so we kind of covered these. So establishing a new vendor, identifying the best practices to record our expenses. So remember I said, if you use the expense, you can always use expense. If you use check, it's only for bank accounts. Determine the appropriate expense related settings, meaning should I bill this back to a customer? Is this a two-way item that I'm purchasing to resell later? Things like that. Recognizing the alternative entry points for entering a purchase transaction. So you can also, you can enter your purchase transactions through your bank dashboard as well, which I think is what we were talking about. So in your bank dashboard, and if you're unfamiliar with the screen, we will talk about it in excessive detail tomorrow as well. In this bank dashboard, it'll show you all your spent monies here. Okay. So it'll say, oh, you spent, it's a bad example here. You spent $114.09 at PGE, which is an electric company in California. So here it's telling me that it found this is a match. If it didn't find something like here, a rental, right? A1 rental backhoe. So clearly our landscaping company rented a backhoe. So you can actually add A1 rental as a vendor, excuse me, right from the same screen. This pop-out slider should look exactly familiar to all of you. You can, I don't recommend it, but you can just skip adding all of the pertinent details. And then you can also categorize transactions here. So you can pick that it's equipment rental. We were talking about if we wanted to bill it back to a customer, that option is here. What you notice is missing is that taxable part. And then the two-way product and service items. So remember we talked about Cassian or loads of bricks. So like you can't pick that you're buying 3 pallets of bricks from A1 Rental here on this screen. But if we're just recording equipment rental and maybe we don't want to make it billable to anyone, we can just add it there as well. We're going to talk about this screen a lot tomorrow also. So just know that you can enter an expense, you can enter a check, you can enter a bill, or you can enter from this bank screen, okay, from the bank feeds. So let's say let's say that we entered that bill for Barbara Gordon. So here's the bill that we entered with the 1,005 made up invoice number that I had for her supermodel charges and 10 fountain pumps. Really, I should come up with a better example. I'm sorry. But let's say I'm ready to pay her. Okay. Time has gone on. She gave us 60 days to pay her. It's now April. It's time to pay her. If I go into this plus new button, my pay bills are here. Okay. If we were to pay her with, like if we were to schedule a payment electronically, for example, and it came through the bank dashboard where I just did that A1 rental, it would try to match that $10,000 with this $10,000 invoice. Okay, so QuickBooks will try to match things. The problem comes when you owe people the same amount of money, but they're different vendors. So, and QuickBooks gets hung up a lot with things like that. Like we do the books for an HOA in Arizona, and it's $187.50 every 6 months. And so we get a lot of bank deposits for $187.50, and it tries to match it to any one of the numerous like 850 properties that each have an invoice for $187.50. So it gets really confusing with things like that. But let's say we wanted to pay Barbara Gordon. So we would come into the pay bill screen, and it's going to ask us where we want to pay her from. Are we going to pay her with our credit card? Are we going to pay her with our savings account, with our Visa? If we're just going to write her a check, you do it from our checking account. And when I pick checking account, the starting check number showed up here. When I had it set to pay with a MasterCard, there's no check number for the MasterCard. So from the checking account, it's going to ask when we're going to pay her. So usually it would be today, what our starting check number is. And if we wanted to print checks on physical check stock, you would check this box. Then you would mark off any and all that you want to pay. You could filter your reports if you have a lot of bills to pay, for example. You could filter it to ones that are due today, ones that are due this month, ones that are things like that. You could pick a certain date range, or you could pick any one of your vendors. All right. You could pick ones that are only overdue. You can resort your list by reference number. You can sort your list by payee. You can sort your list by the amount that's due. Sorry. However you want, whatever makes sense to you, you can do that. You don't have to do them if you're going to pay a whole bunch at once. You don't have to do them all at once. You can come in and pick them one at a time. The beauty of the pay bill screen, though, is that it allows you to do them at once. So let's say I want to pay these three, and I'm going to print my checks. Okay. There's some options down here. So you could save this and then come back and pick more if you wanted. You can save and print or save and close. So if you save and print, it's going to open a screen that says, now it's time to print the checks. These three. If you save and close, you can go back into a different place and print the checks. If you're using Melio that's integrated with QuickBooks, you can do schedule payments online, and it's going to show these three in the next window, which unfortunately I can't show you, but it's going to be those. I'm going to save and close because I want to show you where you go to print the checks. So we have 3 bills that are marked paid, and then we're going to come in here and print checks as an option. So you can go to print checks, and then you say, okay, because I never printed checks before, it's asking me to align my printer. So essentially this part, let me do it again. Let's see if it'll go. So then it'll show you, here's the 3 checks that we wanted to pay. And then you put in your starting check number, and then you would hit review and print. And then it comes up with the print preview. Once you get your checks loaded in the printer, then you just hit your print button here, your print button here, good to go. So questions on printing checks, paying bills? Hey, you guys are great. All right. So we covered these. So someone asked, do you get reminders when things are due? Yes. It's on your dashboard. Which, okay. And all of these, like you can customize all of these to say when things are due and what's going on. So it'll show you, wait for the tiles to load. Okay, so they're not going to load, but yes, you would see it here. Do you see how this one says invoices and this much is unpaid? You can make this tile for your accounts payable to show how many bills you have that are unpaid. So you would get a reminder there. There's also reports that you would see. In addition, for instance, it asked if she had multiple invoices to a vendor and wanted to print one check. Can she do that? Absolutely. So that's the beauty of that's why you would enter things as bills and then go to pay bills. Let me show you that real quick. Okay. So this is a current open bill in the sample company file for accounting fees to Robertson and Associates. I'm just going to copy this one and make a second one. And I'm just going to call it the second one, and I'm going to make it $400. Okay. So when I go to save and close, it should take me back to the pay bills screen. And never mind. All right. So now I'm going to go pay bills, and then you'll see them both there. So if you were to check them both off, it's going to print, it'll print one check for $715. Or if you go to schedule payments online, it'll send one payment for $715. There is an option in a lot of those systems to have it print individual checks for that, but I don't like that. The only reason you would want individual checks, it's frustrating if you have 4 utility accounts with the same company and you have to pay, you have 4 different account numbers. It gets really confusing for the utility company if you send one check for 4 account numbers. Okay. All right, so we covered, let me show you one other thing. Okay, so we were working on the expenses tab. There's a couple of things that I want to show you in here that I don't particularly love, but they're available to you. So this expense tab, the first part, we talked about the vendor part. So here's your giant vendor list. You can search and it'll come up like this. And then when you're in the search feature, the list kind of goes away, but do you see these lines in this arrow? If you click here, the whole list comes up again. And then you can click on a different vendor if you needed to see it. It also, if you need to change an address, you click edit, and then you recognize the slider. So all of this is things that we just saw before. If you want to see the history for your vendor is down here at the bottom. So there's been one bill in January of 2023 for $900 to this vendor, and we made a payment on January 20th. So the bill was on the 11th, we made a payment on the 20th, it's for rent and lease. If we're like, you know what, that's not a rent payment, that's insurance. If you were to check this box, you can categorize it and change it to insurance. So, which is pretty handy. And sometimes you're like Google, for example, a lot of clients use Google and we do a lot of software development companies. And so sometimes it's for their Gmail email accounts and sometimes Google is for their storage on the servers. So it just kind of depends, and they want to track it separately. So you can update it there. You can also just pick and change it as well. So this batch transaction part works really well when you have to change a whole bunch at once, but for one-offs, you can just type it there. You can filter things to say, show me only open bills, show me only the bills, show me only the payments, things like that. Show me only things this year or only things from last year, okay? So that's those. Your bills are here. and it's going to list all of your bills. For review means that you need to review them because let's say a staff entered them and you want to review them before they go into the system for good. So for review would be that. Unpaid would be any unpaid bills. And here you can see our 2 accountant invoices. Paid bills would be anything that we've already paid. So here's our $10,000 payment that we made to our reported. Expense claims, this part is new. This is where your employees would submit for reimbursements for things. I'm going to tell you, like, until I sat down to check to see what was new and everything, I didn't even know that this existed. So I can't tell you a whole lot about it. But the nice thing is that you can just click this link and watch the video. And it will tell you everything you need to know about how to set it up if you had expenses for your employees. But then again, it would come in a review status, you would approve it, and then it would go to the reviewed. And then I suspect it'll show up on the pay bills window. Okay. These, your expense tab. This is going to list all your bills, all your bill payments, all your checks, and all your expenses, and all of your credit card charges and things like that. I find this list to be not so helpful because it's just a giant list of transactions. And like, if I'm looking for something, for example, and I know who the vendor is, I'm going to go to the vendor and look at the history. Or if I know that I paid it with my credit card, I'm going to go look at my credit card transactions. I'm not certain, like, I started using QuickBooks before they even thought of this window. So like, I just go somewhere else to get the information because that's the way my brain was trained. But if your brain works this way, like this might be super helpful for you. Like I have a client that uses the invoice part of the revenue side, the counterpart of this all the time and loves it. So Melissa asked, would a tech fund allowance fall under expenses or payroll? And I'm not sure what you mean by tech fund allowance. Like if you're giving an allowance to employees for technology or you're, oh, okay. So if you're giving employees money, then a couple of things. One, if your goal is to reimburse them for technology that they purchase, then they have to turn in receipts, and then that becomes like a technology expense to you. If they don't turn in receipts, then it can become gross pay to them. So, so it kind of depends on you're going to want to look up accountability plans, expense reimbursement accountability plans, and that'll help answer the IRS determines whether it's an expense or payroll. Because if you don't hold employees accountable for turning in receipts, then it becomes payroll for them. Okay, so we talked about so the expense center, which I don't use particularly much, how to pay bills. And then we are going to talk about customers and sales tomorrow. So let me I'm going to show you one other thing. So I want to talk really quick about your purchase orders here. I'm going to show you this, and this screen should look shockingly familiar. So, here's your name. And then if there's an email address, you can like email your purchase order to someone, how they're going to ship it, who you're going to ship it to. And then here's your category details. So if you're just buying an expense, you would put it here. If you're buying your 3 pallets of bricks, you would put it here. How many you're buying, how much you're buying them at, what your cost is, if you have a customer that's associated with it, all of these things. So all of this is here in a purchase order. This exists, you know, all of these should look shockingly familiar because this category section, like from here down, all of this is the same on a check, on an expense, on a bill, on a purchase order. And then I bet you can guess if you were to enter a credit card credit, which is a refund on your credit card, guess what? It looks exactly the same as all the rest of them. So that's the nice thing about Intuit, is that they sometimes make things very simple. And once you figure out what all the boxes mean, they mean the same thing in 16 different places. So, so that's all of those. You would use this vendor credit if you track bills and one of your vendors gives you a credit for something that went wrong. So like, let's say Cassie bought her 3 pallets worth of bricks and half of what one pallet was damaged. So she would enter a bill for the 3 pallets that she bought, and then her vendor would send her a credit memo with the half a pallet of bricks. And so she would enter that as a vendor credit. And then this vendor credit looks exactly like, maybe it's not going to work. Okay. It looks exactly like all the rest of them. When you're doing a vendor credit or a credit card credit, because it says credit here, QuickBooks already knows it's a negative number. So you would just put in that you returned a pump, for example. You don't put in -1, you just put in 1. Because it's a credit, it's already there. And then I know this sounds crazy, but I'm going to pick the accounting company that we're returning a pump to the accounting company because I remembered that they had an open bill. And when I go to pay bills now, they're going to show here, but now look at, put this $10 in there because I just put in that $10 credit. So this is what's going to happen with your credits, is it reduces the amount of bills that you would owe. All right, how's that feel? So we kind of covered everything in this column. So, okay, so there's a question, do discounts in dollars from vendors go under the vendor credit? It depends on why you're getting the discount. So if it's one of those things that's too, like if it's a term discount, like 2% net 30, for example, you would have to set that up in your vendor. So give me just a second. Yeah, okay. So it's not set up in here. So if it's a discount from a vendor, you would make sure that the terms were set up here for the payment discount. So if you pay within 10 days and you collect a 2% or 3% discount, you would set it up here under your terms, which is under your all lists. The terms are there. There's one thing I want to show you guys still. So you would set it up as a term, and then when you go to pay bills, there would be a column that would show the discount that's eligible for that bill, just like how there was a column for the credit, the $10 credit that showed up. Nancy asked if QuickBooks has a report for depreciation on fixed assets or equipment. It doesn't really, it doesn't do a good job. Like there's a fixed asset kind of schedule that's built into QuickBooks Desktop, but online doesn't have one that I'm aware of yet. And purchase orders are in the test drive, but you have to be in, I think purchase orders either might be in the advanced section, or you have to turn them on in the expense tab under account and settings. Okay. The one thing that I wanted to show you real quick was class tracking and location tracking. So give me a second. I'm going to make sure it's turned on. Oh, sorry. And then I was in the wrong place. All right. So I'm going to turn on classes and I'm going to turn on locations. And that was in the advanced settings. You remember I was telling you about my pizza parlor client? So we have one class for every location. The reason I don't use locations is I'm going to show you. So on an expense, let's say that they, I'll pick my Barbara Gordon again. And here's the location, right? So this location has, because it's above this line, like in this gray part at the top, and it's in the same place, whether it's an expense, check, a bill, a credit, any of those, any of the same features, it's all above the line here. It's a one-to-one relationship, meaning that I could pick location 1 here, and let's say we're going to pay her $1,000 this time. Let's say we're going to pay her $2,000, but we're going to pay her for class, the first class. Oops. And we're also going to pay her $1,000 for the second class. The reason, so if I were to run a report later that says, how much money did I spend on legal and professional fees by location? I'm going to get one number for $2,000. If I say, show me how much I spent on legal and professional fees by class, it's going to give me two $1,000 numbers. Does that make sense? So this location is a one-to-one relationship with the entire transaction total. However, you can assign classes by lines. So you can even assign it. And if we're buying, 15 pumps, we can pick that we're buying them for class 2. Okay. So sometimes using this location makes sense. Sometimes it makes more sense to make your classes locations. This class tracking here, accountants, we like to call them revenue centers or cost centers. So if you have multiple stores, you could set up classes for each one of your stores. If you do a lot of business that's like, let's say you have a huge online business, for example, and you have revenue that comes from distributors and revenue from wholesalers and revenue from retailers, your classes might be wholesale, retail, distributor. So I'm going to save this, and then I'm going to run some reports. We're going to talk about this. I'll set it up before tomorrow so that when we go to run our reports, you can see what I mean. But if I run a profit and loss reports, so we're going to do and we're going to talk about reporting tomorrow. So I'm just going to fly through this. So if I do show me this month by locations, it's going to give me location 1, $2,000, right? But if I say show it to me by class, it's going to show me 2 $1,000 expenses by class. Okay. So when you just keep that in mind, because you can run all of your profit and loss reports, you can filter all your reports by classes, you can filter your reports by location, but your location attaches to the dollar amount of the entire transaction. Whereas a class, you can assign to individual line items within the transaction. I can still assign the same class. Like, let's say that this $1,000 bill that we have for Barbara Gordon, or this $2,000 bill was all for one class. I can absolutely just make it $2,000 for one class. That's totally fine. So you can still have one transaction that's only for the entire transaction is for one class. But if you use the location, it limits what you could do in the future. All right. Okay. So I'm back to having split it. I'm going to talk about tags for 10 more minutes and then we're going to go. So this is a tag. So I'm going to add a tag, and I'm just going to breeze through this as well. A lot of people don't use tags. So like we use tags during COVID to track money that was being spent for the PPP for expenses. We tracked it for, we used it for the shuttered venue operator grant, for example. I use this flag. I have some clients that are looking to position their businesses because they want to sell them in the future. So I will have a tag that will say owner, for example. Sorry, it's being dumb. It's not, it doesn't work well. So I will have a tag that says owner, for example, because then I can run a report and say, show me all my kind of owner discretionary expenses. Because if you're looking to sell your business, but you drive a Bentley, for example, like that is an owner discretionary expense that likely you're not going to give your Bentley up when you sell your business, right? So when you run these reports on the tags, like, or when you add tags, for example, you can get reporting on them too, but remember, because it's above the line, the tag attaches to the entire transaction. So when you go to look at your tags later, you're going to see that there's 2150 in tags for each one of, for it attaches to the whole transaction like a location does. So there, it's attaching by tag. So keep that in mind. It's just an option. I like tags if you're like, hey, I wonder, you know, if any of you use the R&D tax credits, you could use the tags for your R&D tax credit, because then you have a report and you can go in and see like, oh, this $2,000, 1,000 of this would qualify, for example. Okay. And then in the outline, so I think you guys were sent, Karen, you can correct me if I'm wrong, but I think they were sent a student guide, right?
Yes, they were.
Yeah, so the student guide, like, it's not, sadly, the order is not in the student guide. So we were around page 52. And then customers and sales starts on page 67. So the student guide, like, again, if you just search whatever you want to do in a Google window, then it's fine. And then someone asked, partner with their own business card, would you, okay, so Delphina asked if there's a partner that has their own business credit card and would I recommend using a tag? So I would actually set it up. I would set it up either as a petty cash bank account where you either reimburse them for those things, or I would, or link, if all the expenses on that card are for the business that you're doing together, then I would set the credit card up within QuickBooks. If you're going to reimburse that partner for those expenses, but they also use that card for other things, I would do it as a bill, or I would do it as a petty cash owner bank account. And that using that petty cash owner bank account thing is very common. And there's a bunch of videos online about that one as well. I can dig that up and ask Karen to send it over too. So, okay, more questions about vendors. We're about we're going to start on page 67 tomorrow. But I did jump all around because I didn't like how the book was written. So, and then remember too that the recording, so today's video, everything today and tomorrow will be recorded as well and available on the SBDC's YouTube channel. So you can come back and watch it later. The whole point of what I wanted to get across today and tomorrow is just like QuickBooks is available to do these things. So, because a lot of times when we're sitting in the moment and trying to figure out like, how am I going to do my accounting? Like the biggest thing is to get your revenue and expenses recorded in a system. And then you can go from there. The other thing is QuickBooks is changing what they're doing so fast that manual, there's parts of that manual that are out of date already. So, and I just downloaded it last week. So like what we were talking about with the expense reimbursements for employees, for example, that's not in the book. So there's a lot of things that they're doing because they're making so many changes. So I would say, like, you can use the book as a reference when you want to go back and look up, how do I do that again? Most of it's still in the book and would be valid. But I would just, kind of try to generically understand, like, oh, that feature is available and that feature is available. So I will try to tell you where we're at tomorrow, and try to do a better job of that. But I actually didn't even print it out this time. So, but I will try to tell you. So,
I just
okay.
wanted to say, if anybody has not received that guide, please send me an email and I can make sure that that happens for tomorrow. And I'm sure it will be useful information going forward for your business.
Okay, that's all I got, but I'm going to answer Brooke's question about the payment. So you're welcome to stay and listen for the next 5 minutes. But otherwise you can go, and I'll see you here tomorrow morning. So, okay, so Brooke, you asked about you said you're unsure about timing of the question. So we currently send out invoices and accept paper checks back. I was asked by a company of why we don't allow payment to be made through QuickBooks. Is this something that can be easily set up for them to pay us? And how does that payment get into our business checking account? So there's 2 ways that it can be done, Brooke. So one, if they're using a payment system like Melio or like Bill.com, then you would get an invite from them that says add your bank details. So then you can go in and put in your bank account information, and then it will make it'll come through as a direct deposit for you. If you were to use QuickBooks Payments, which we'll talk about tomorrow also, if you were to use QuickBooks Payments, it's just like a merchant processor. And when you go to make an invoice to someone, there'll be an option at the top to have them pay electronically. And it's not there. It would be right here in this gray box next to the customer email. There would be an option for them to allow electronic payment method. So then they could type in their credit card information, or they could type in their ACH information, and then it would come through. The nice thing about QuickBooks Online Payments is that if you were to send an invoice to someone, and I'm going to open an email because I have someone that sends me an email to pay them electronically with QuickBooks. So I'll show you what it looks like. But if you were to send an invoice and then your customer, if you were to send an invoice to a customer, the customer puts in their bank account information and pays you back, what happens is QuickBooks automatically will apply that payment to that open invoice. So that part is really nice. Let me show you. Okay, apparently I email with her a lot. Okay. All right, so this is what it looks like. Maybe. So what it does is it sends me a link, and then it says, I want to review and pay this. So this is what it would look like coming, with all of your information in it. And then the invoice would usually be attached, but you could review and pay. And then what happens when I click on this one, it's going to be like, hey, dummy, you already paid this. So it's going to tell me that it's already paid. But you can download a copy of the invoice here. And then once you pay it here, like if your customer pays it here, it's automatically going to mark it paid in your QuickBooks and do the bank deposit for you. So that part is super slick when you're sending out a lot of invoices. But remember, the Intuit charges for that convenience. And that process, most merchant companies have as well. And they have some kind of interface between QuickBooks and their merchant company. So if you didn't want to use Intuit, you could still use a different merchant company. And what would happen is you create your invoices in QuickBooks, run some kind of tool, or the tool would run automatically, and then your clients would get email links from the merchant processor instead of from Intuit. So there's about 1 million ways to do it. Intuit makes it convenient because it's built into the software, but then you pay for the convenience. So that hopefully that helps. All right. Okay. Perfect. I don't have anything else. So thank you all for coming, and we'll talk tomorrow. And then my information is at the end of the slide deck that you guys have too. So if you have any questions later, I'm happy to answer them also. So, okay.
I thank you, Tanya.
Bye, everyone.